The real estate investment landscape has captured our attention, particularly as we move from the turbulent seas of 2023 to the promising vistas of 2024. Even with a notable surge in interest rates, the preceding year witnessed a remarkable surge in residential property values across the majority of markets. This surge was driven by a significant disparity between supply and demand. In the forthcoming presentation, I will delve into the diverse forecasts for the housing market in 2024. Our objective is to provide you with a more vivid understanding for those pondering the pivotal question: is it the right time to invest in real estate, or should I hold off until 2024? Housing market predictions for 2024. Building on a multitude of evaluations and the ever-evolving market dynamics, let's now explore some enhanced forecasts for the 2024 real estate investment landscape. If you're finding this information valuable, don't forget to subscribe to our channel to stay up to date with more insightful content like this. Price stability. As we navigate the intricate landscape of 2024 real estate investments, we find ourselves amidst a tapestry of divergent expert forecasts. Morgan Stanley paints a picture of a 2% decline in home prices, while Lawrence Yun, the chief economist at the National Association of Realtors, envisions a 3% to 4% surge in home values. Meanwhile, in California, the median home price is poised to ascend by 6.2% in the coming year, revealing the intricacies of regional market behavior. This array of predictions underlines the inherent complexity and multifaceted nature of the real estate housing market. Regional peculiarities are key players in shaping the trajectory of home prices. Beyond geography, variables such as interest rates, job market dynamics, and governmental housing policies loom large on the horizon as potential influencers of price stability in 2024. These contrasting outlooks remind us that while overarching trends provide a broad perspective, individual circumstances and localized conditions will exert their influence on the actual trajectory of property values for buyers and sellers alike. Increasing housing inventory. The construction industry is sounding the trumpet for an uptick in housing supply. Multiple construction projects are currently underway, with multifamily housing stock expected to grow by nearly 7% by year-end, extending this upward trend into 2024. Moreover, the initiation of new single-family residential projects is projected to reach 120,000 by the second quarter of 2024, offering a glimmer of hope for alleviating the supply-demand imbalance. Investor engagement. The level of investor activity in the real estate housing market remains a pivotal force, and cities boasting strong economic fundamentals continue to magnetize capital. Cities like Raleigh and Charlotte are shining examples, luring investors with their reasonable living costs and vibrant employment opportunities. These urban centers are set to remain beacons for investors in the coming year, reinforcing the health of their local real estate markets. Forecasts indicate a 15% surge in real estate investment volume for 2024, marking a resurgence following a dip experienced in 2023. This resurgence reflects investors' renewed faith in the market's potential for profitable returns. The expected increase in investment activity holds promise for shaping the dynamics of the housing market, potentially translating into a healthier supply and more stabilized prices. How will interest rates affect the housing market in 2024? Interest rates serve as a foundational pillar within the real estate housing market, wielding substantial influence over both buyer behavior and property values. Nevertheless, numerous economists are anticipating the arrival of a recession in 2024, which is likely to usher in lower interest rates despite the Federal Reserve's assertion that they will remain higher for longer. If interest rates experience a significant drop, the anticipated mortgage rate lockdown effect could be mitigated, potentially injecting a substantial amount of inventory into the market. Buyer affordability. The influence of interest rates on the cost of borrowing is unequivocal. Lower interest rates translate into reduced mortgage costs, rendering home purchases more accessible. Conversely, elevated interest rates augment borrowing expenses, potentially dissuading budget-conscious or first-time buyers. As previously mentioned, even a marginal decline in interest rates has the power to rekindle the interest of millions of potential buyers, thereby exerting upward pressure on property prices. This explains why home values typically remained resilient throughout recessions, except for the 2008 crisis, which was characterized by an overwhelming surplus of housing inventory. Distinguishing mortgage rates from interest rates. Not all interest rates are created equal. We have the short-term Fed funds rate, dictated by the Federal Reserve, the influential 10-year Treasury yield, a global benchmark for interest rates and mortgage rates. While they do not always move in perfect harmony, they exert mutual influence and generally align over the long term. Thus, while the Federal Reserve has authority over the Fed funds rate and its influence extends to mortgage rates, economic or geopolitical developments can occasionally prompt mortgage rates to deviate from the Fed funds rate. For instance, a war or stock market crash can substantially drive down mortgage rates, even if the Fed funds rate remains unchanged. In 2024, most economists are anticipating a decline in mortgage rates due to various factors, a change that is expected to stimulate demand and subsequently push property prices higher. Property values. The correlation between buyer demand and property values is straightforward. An influx of buyers, spurred by lower interest rates, intensifies competition for available homes, frequently resulting in price escalation. Conversely, higher interest rates can dampen buyer enthusiasm, potentially exerting downward pressure on property prices. Fortunately, 2024 is poised to see a decline in rates, making increased buyer demand more likely. Impact on real estate investors. Interest rates also significantly affect real estate investors. Lower rates can incentivize investors to expand their property portfolios due to reduced financing costs, lower monthly payments, and improved cash flow. Conversely, elevated interest rates may curtail investment activity, given the amplified financing and operational expenses. Market momentum. The overarching momentum of the real estate market is often swayed by interest rates. A market boasting lower interest rates typically experiences an upswing marked by heightened buyer and investor engagement. Conversely, a market with higher interest rates may perpetuate the existing deceleration. Unemployment's role. Unemployment stands as another pivotal variable, as it can substantially influence interest rates and property values. Unemployment rates factor prominently into the Federal Reserve's decisions regarding interest rates. High unemployment rates could potentially trigger more forced property sales, which, in turn, may increase inventory levels and exert downward pressure on property values. However, this outcome is seen as improbable. Consumer spending and economic growth. Interest rates cast a broader influence on consumer spending and economic growth, factors that in turn ripple into the real estate housing market. Lower interest rates can kindle spending and foster economic expansion, creating a favorable climate for the housing sector, while higher rates tend to have the opposite effect. To sum up, the path of interest rates throughout 2024 will be a pivotal factor in molding the dynamics of the housing market. The sway of interest rates reaches far and wide, impacting buyer capacity, mortgage rates, property values, investor engagement, market momentum, and the broader economic landscape. These intricate elements collectively compose the tapestry of the real estate housing market for the year 2024. As we conclude this insightful exploration of the real estate landscape in 2024, we hope you've gained valuable insights into what lies ahead. The road to successful real estate investment is paved with knowledge and informed decisions. If you're eager to learn more about navigating the world of real estate and want to avoid common pitfalls, we invite you to click on the video displayed on your screen. It's an excellent segue to our discussion here, where we delve into real estate mistakes to avoid. Your journey to becoming a savvy real estate investor continues just a click away. Thank you for joining us, and we look forward to sharing more valuable content with you in the future.